Episode 193 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, before we get started today, I want to thank our sponsors. CME Group, Trading Technologies, RJO Futures, and Top Step Trader. Now today I spoke with Adam Johnson, founder and author of Bullseye Brief. I had an enjoyable conversation with Adam. We kicked it off by Adam telling us how he got his start in the financial industry. He tells us why he started Bullseye Brief and how he trades using fundamental and technical analysis. He gives us some thoughts on tariffs and trade. Adam tells us that the uncertainty and volatility in this market is creating great opportunities. And he shares with us his 3 themes for 2018 and how he's trading them. Finally, Adam tells us what he thinks about Facebook and the FANG stocks. As usual, thank you all for listening, and please enjoy this episode. Adam, welcome to the show.
Anthony, thank you. Great to be with you.
It's great to be with you today, Adam. Now, I first found you on LinkedIn, and I was listening to one of your walk-in talks. I thought it was very interesting, and then I went and followed up.
Oh, beautiful.
Followed you on Twitter, and then I saw that you were posting some tidbits from your Bullseye Brief. Then I went and read that. So you're a very interesting guy. You know a lot about the market, so I'm excited to speak with you today. But like I do with all of my guests, I'm always interested how they got their start in the industry. So Adam, could you tell us how you got your start in the financial industry?
The funny thing is, I actually went to college assuming I was going to be a doctor. I was so certain I was going to be a surgeon. And my Econ 101 prof, actually Alan Blinder, former vice chair of the Fed, one day after literally Econ 101, I was going up to ask him questions. And he goes, "Hey, what's your name again?" I said, "It's Adam Johnson." He goes, "And what's your major?" And I said, "Well, I'm pre-med, so it's probably biology or something." And he goes, "Yeah, that's a bad idea." He goes, "You're the only guy who asks me questions every day after class. I think you like economics, and you should be an economics major." And literally, I walked out of Makash 103, which was the lecture hall, and I was like, I'm going to be an economics major. And from there, I got my first job at Merrill Lynch, and, it just kept going. Kind of funny, right? I mean, like, one minute it'll change your life.
Yeah, that's pretty cool, because if that professor didn't mention that to you and trigger something in your mind, you may not have ever gotten involved in economics and in the financial industry.
Well, I mean, I was really fortunate to go to Princeton, and I think the blessing of going to a place like Princeton is you meet people who change your life. And to have a guy of that caliber, Alan Blinder, former vice chair of the Fed, my Econ 101 prof, and he just somehow knew enough about life to figure this out about me. I mean, wow. So, I got hit by the luck truck on that one, because I think I probably made a better Wall Street guy than, doctor. So, I can risk money, not lives. You know what I mean?
Yeah, I mean, and plus our industry is so much more fun.
Yeah, actually it is. I mean, I really do love getting up every morning and trying to figure out what's happening in the world. And this is the way I think about it. Like, there's some guy or gal down in Australia who's shearing sheep. And that wool somehow gets sent by someone else to China, where somebody else weaves it into a sweater, and then it's transported by yet somebody else, and it ends up in a store on Madison Avenue in New York City called Polo Ralph Lauren, ticker RL. And somehow all that different activity gets distilled into one single thing called a stock price. Is it worth 30 or is it worth 31? And why? And it's that process that is what turned me on and what gets me up out of bed every morning. And that's economics. And he was absolutely right. I love it. It's the language of life. It's how people come together and interact. And, our job as investors is to try to sort out all those different relationships, get rid of the noise and focus on growth, valuation, the stuff that matters, and then deploy capital so we can try to build some wealth for our families.
Talk to us a little bit about how you got the idea to start Bullseye Brief, and then give us some insight as to what you're doing at Bullseye Brief.
So Bullseye is basically my career of 25 years, kind of distilled into one thing that is just my take, my view of what Wall Street research ought to be. And I was a trader and an analyst, sort of a portfolio manager, but really a trader and an analyst for like 20 years. Ended up at Bloomberg in the financial crisis. I was going on as a guest. They asked me to join full time. So ended up hosting a couple of shows every day for a few hours. And so, I spent 20 years analyzing the stocks and companies and businesses, and then, 5 years talking about stocks and companies and businesses. So Bullseye is basically the coming together of all of that stuff, where every 2 weeks I put forth 3 very specific stock ideas. I tell people the 3 ideas most worthy of your time. And, then on the off weeks, I put out kind of a Sunday night roadmap for the week ahead and, update people on trades and what we ought to be doing with the portfolio. But, it's really what I think research ought to be. It's specific, it's thematic, it's highly actionable. I say buy this stock here at this price. There's your stop. There's our target. Here's why this is my target. And by the way, here's why I'm buying the stock. So again, it's just 25 years of either analyzing companies or talking about companies, and that's Bullseye.
Yeah, and you put out some great free content as well. I know Bullseye is paid content, but you put out a lot of free content. I read it, and you talk actually.
I put it out too much. I put out too much free content, Anthony. But, you got to do it.
And you talk a lot about technicals and fundamentals. So I'm curious, which of the two do you favor? And then talk to us about how you actually execute an idea.
Got it. So for me, fundamentals are 90% of the story. Charts are great because they give us a visual, they give us a reference point, but I would never buy or short a stock simply because of a chart. I would use a chart to help determine when I ought to buy or when I ought to short, or maybe even when I unwind. But I like to go through company transcripts. What did management say on the earnings call and why? And now let me verify that by running some numbers. And if I can quantify what the growth ought to be for this company and project out a few years and then discount those cash flows back to the present, oh, wow, it's trading at like 27% below where it ought to be. Okay, fine. Or if something is, trading at a discount to book, or if there's some great growth story and I can project out, like, for example, lithium demand. There's a whole lot of demand right now, or a whole lot of commentary right now about the lithium market and how fast it's going to grow and whether demand will exceed supply or vice versa. And all the bears out there, everyone who's negative, is talking about how, yes, electric vehicles are growing very fast, but not faster than supply. But the amazing thing is none of them have figured into their supply-demand equations the demand associated with fleets like buses. And buses use so much more lithium because the batteries are so much heavier. It's like 20 to 1. So they're way underestimating lithium demand. So if I can actually run those numbers and show you, now we can say, oh, we ought to be buying Albemarle, ticker ALB, or we ought to create a little lithium junior miners basket, with some of the Canadian names that trade at $1 and $2. Fine, they're call options. So it's fundamental research where I then run the numbers, I look at what management's doing, I try to find some sort of thesis that I can latch onto. And then, finally, the last stage is look at the chart and say, okay, has this thing run and do I need to give it a pause? Okay, maybe, or, oh, wow, it's way down. In the case of Google, over the past few days, it just got trashed. I said, oh, it's 3 trades in 1. Google's the most innovative stock I know. It's down on, this crazy tariff stuff, which, by the way, is just a head fake. And we can get into that if you like, because I can explain why. And then the vol is all blown out, so we could actually write puts as a way of getting long. So 3 trades in 1. Do you see what I mean? Yes, You're right. It's a combination of fundamentals and technicals, but at the end of the day, there has to be a story behind the stock.
No, I totally get it. So basically, you're using the fundamentals to get a theme. of what's happening in the
Yeah.
marketplace. And then the technicals are a guide to your execution.
That's right. Yeah, very well put. Thank you.
Great. Now
You said
wrote
that better than I did.
the other day you wrote a post, and in there you said that the global financial markets are behaving as though we've all fallen into an unfathomable abyss, and you assured us that we have not. So what do you believe is really happening?
So I have been saying for about 6 weeks now, and somewhat unpopularly, that the whole tariff trade thing is just Trump at his best, or worst, depending upon your perspective. The art of the deal. What Mr. Trump does is stake out an extreme viewpoint where people say, that's the craziest thing I've ever heard. Well, what he then does is meet in the middle. Staking out an extreme viewpoint gives him flexibility and room to come to the center. So, for example, the whole thing started with aluminum and steel tariffs, and all the pundits and the mainstream media and all those guys out there were saying, "Oh, he's really going after China." No, he's not going after China. Only 1.5% of Chinese steel ever finds its way to the U.S. All right. This was all about Canada and Mexico. Those two countries account for 1/4 of the steel that we import. And remember, we're negotiating NAFTA right now. So this whole thing about steel and aluminum was just to gain leverage over Canada and Mexico in NAFTA. And what have they done? Because we are negotiating NAFTA, the Trump administration now backed off and said, oh, well, I'll tell you what, we'll give you an exemption to act in good faith. Well, the Europeans said, whoa, what about us? Okay, fine. Germany, you've got an exemption. They only account for about 3% of our imports. But South Korea, we gave them an exemption, all right, and Brazil as well. Canada, Mexico, Brazil, South Korea, Germany. You add up the imports from those 5 countries, it's 51% of what we import from offshore, all right? So that's my whole point. This whole thing has been about negotiation. The bark is way worse than the bite.
Yeah, like you said it from the beginning, this is why you do fundamental research, to develop a theme. And you're doing your homework. You're not just following media bias, because the media is going to lead us in one direction. One day, everything is very negative. The next day, it's very positive. And along the way, the people that are doing their homework, this uncertainty provides opportunity.
Right. And, if I were a guy only looking at futures, I'd be saying, oh, wow, the pit low took out the pit low from, January 23rd, and that means that our next Bollinger line whoa, time out. What's really happening? Run the numbers. How much of this stuff are we importing? What's the dialogue in Washington? Talk to some of the guys in Washington, see what's happening, what back channeling, and then you can say, all right, you know what? In this case, the numbers mean, the charts mean nothing. This is a fundamental story. Latch on to what's really happening. And that's where you get the confidence to go in and buy on those down 500 days.
See, I want to make a point here to all the futures traders out there listening to this show, and the reason why I read fundamental research. And I'm definitely someone who doesn't understand all of it, but I read it to get a feeling of the market, a theme as to what's going on, specifically like what Adam spoke about earlier. And it's important for us, even though myself, I am primarily a technical trader, I understand that if certain levels get taken out, yes, I'm going to have to react to what my technicals are. But if the theme of the market is not coinciding with the technicals, then we could have a real choppy market. If all of a sudden the theme of the market coincides with technicals, then we could have a bigger and extended move, or it also creates an opportunity. So I think that whether you're someone who says, I don't need to watch fundamentals because I purely trade technical, when we get really busy, I think it is important to do some of that homework, understand what's going on behind the scenes.
Yeah. And thank you for making that clear. In a perfect world, fundamentals and technicals would align. And then we have double the confidence to put on whatever position we're putting on, whether it's a long, whether it's a short, whether it's unwinding something. So my first move is always to ask what's going on here. And I run the numbers, I read the transcripts. First of all, I probably read, 75 or 80 emails every morning. So there's just this flow of information. And so I can start to kind of put a patchwork together. And then I'll look literally only about the 4th or 5th iteration of trying to figure out what's happening, only then will I look at a chart and say, so how's the market processing all of this information, right? And then you start to put together a more complete picture. That's just, my process, and I'm not saying it's the right way. It's just what works for me. And I made guys about 28% last year, 30% the year before. This year I'm up a few percent, so beating the S&P, and I'm up in a crazy market. So that's my process.
You mentioned also the other day that we're in an epic tug of war. Everyone's fighting right now, from nations on trade to traders on rates. And what makes this moment particularly challenging is how much uncertainty we all face. And you said after 9 years of coordinated monetary policy among central banks and synchronized political decisions by the G20 administrations, global institutions are no longer aligned as one. And so I'm wondering, does this make this time more challenging for you to execute ideas, or do you think that this is creating more opportunities?
Definitely more opportunities for me, from my point of view. I think more challenging for investors as a whole. Look, I'm a trader, frequently wrong, but never in doubt. There's very little about which I am uncertain, okay? So I've pretty much got an opinion on everything. Again, I'm not always right, but I do have, I've done the work, and so I'm generally comfortable in my opinions. So that's why I say, for me, this is a time for opportunity. But if I step back and just listen to the conversations as I'm standing at the bar with, other buds who trade, and they're like, whoa, this is an insane day. I think what everyone's grappling with, and you see this in the markets, look at the, LIBOR OIS spread blowout, and on and on and on. We've never before unwound central bank policy that was so completely lopsided for so long by so many central banks around the world. I mean, it wasn't just the Fed or the ECB. It was the Fed, the ECB, the Bank of England, the Bank of Japan, on and on and on, the Bank of Korea, across South America. Everybody was doing quantitative easing. And I mean, think of negative interest rates, like, whoa, hey, government, take my money and I'll pay you to keep it safe. Are you out of your mind? So there's this crazy thing that happened. In 2008, we needed the central banks. We needed the Fed. They came in and they bought when none of us were willing to buy. So God bless them. They did the good Lord's work. But they stayed around way too long. They've given us way too much guidance. It's hand-holding. It's helicopter parenting taken to the extreme. And so now the Fed, eventually the ECB, on and on, they're unwinding that policy. But the problem is we got so accustomed to it. I mean, the guys who are running money now in their 40s, they don't really know what it's like to be in a non-central bank accommodative world, because 10 years ago, as the world was imploding, they were the junior guys on the desk. Well, now they're the senior guys. So if you go back 15 or 20 years, they were probably still wherever they were attending college, just trying to read economics books and, have a good time. So now all of a sudden, they're thrust into something they've never seen before. So not only is it the unwind of central bank policy and this global accommodation, and even administrations, coming together, working together. It wasn't just the bankers. We have rates rising on top of it. We have coordinated growth among all 35 countries in the OECD. We haven't seen that in 12 years either. We have a situation where the most number of people in America are working ever, making the highest gross adjusted income ever, and yet there's no inflation. 1.8%. We've never seen that before either. We're witnessing technology just rip the face off of everything we know. Think about it. An iPhone didn't exist 10 years ago. And now all of a sudden we've got smart cities where, wait a minute, they're driverless cars? Whoa, have I been asleep? How'd that happen? And then the build out that needs to happen. By the way, we're nowhere near ready for that on the whole smart city thing. I've written a lot about this, and yes, there's some stocks that I like. I love the 5G build out, but we're certainly not ready for driverless cars. My point is, there is so much change at absolutely every level of business, of society, of government, and of finance that we've never been here. And it's a little nerve-wracking, and it's upsetting. And that's why I tend to focus on specific stocks rather than the market because it's just too hard to try to like quantify all that stuff and have, an absolute opinion on the market. I mean, yes, have an opinion, but it's just a lot easier to focus on a great stock story and say, okay, let me dig my teeth into this because this I can quantify. You know what I mean?
Yeah. Now, you spoke about the Fed, and I'm wondering, do you think 3 or 4 rate hikes are what we're going to see this year?
For sure.
4 for sure.
4. They're crazy if you only do 3. With the amount of growth in this economy, I mean, I think we need 4. I think 4 are long overdue. Give me 3, possibly 4 more next year. Let's get back to normal on interest rates. There's so much growth in the economy. Fear that you're going to choke off the growth by raising rates 1 to 2 percentage points. That's absurd. I mean, think about it this way, Anthony. You can still go out and get a 30-year fixed rate mortgage at near, not exactly, but near the all-time low. In fact, it costs you $477 per month for every $100,000 of mortgage right now. That's just pulling the rate off bankrate.com. So think about it. You could go out and get $1 million worth of mortgage, and it would cost you 10 times that, or about $4,700 per month. And then you get a deduction. If you're in the top bracket, that's good for about 30%. In other words, your after-tax cost of borrowing for $1 million worth of mortgage is like $3,000 a month. I mean, that is so low. Maybe that's irresponsibly low. So my point is, you're not going to derail the power of this economy by taking Fed funds from 175 to 275, because even 275 is still crazy low.
Okay, so where do you see the 10-year rate going from here? Obviously, you think the rate is going up, but how high do you think it's going up? And also, if you think that we're going to have 4 rate hikes this year and potentially more next year because we have a good economy, do you believe that if rates are going up at that pace, that will hurt equities?
So right now we're in a period of adjustment on trying to process what higher rates mean, because the higher rates go, the higher the discount rate, which means the less you're willing to pay for future cash flows. So that's what this correction has been about, where we went from trading at 18.5 times to effectively 16.5 times earnings. We had to adjust for the fact that rates are going up. So I think part of the pain has already been felt. Right now, the 10-year is at 282. I think we're going somewhere between 3.25 and 3.5.
Real quick, in what time frame from 3.25 to 3.5?
Let's see, what month is this? It's almost April, so
Yeah.
Call it by year end.
Year end. Okay.
Yeah, fine. Another question, but I got rambling. What was your other question? I don't remember.
Oh, the other question was, do you think that if we see 4 rate hikes this year and more rate hikes next year, will that impact equity prices?
Only marginally, because we've already sort of discounted it. As long as, remember, we've got 20 to 22% earnings growth right now. Whoa. I mean, that's amazing. Okay. A good portion of that is from tax reform, and some of that's one time, but you've basically just shifted the entire curve up because tax reform is here to stay. So you have shifted the entire curve up, and so there's a whole resetting of expectations that's happening right now. The growth story is so powerful. I mean, my theme has been the 2 E's of earnings and employment. And this is exactly what we're talking about. The most number of people. I mean, did you see the Fed's estimate last week? Jerome Powell, he said unemployment's going to 3.9% this year and 3.6% next year. Oh my God. You got to go back to 1969 to find anything even close to that. That's very powerful. Remember, 2/3 of our economy is consumer driven. So if you have that many people making the highest gross adjusted income ever, and they're spending it, that's very powerful for earnings. And that's the primary reason why I am so bullish right now on stocks in general. Again, I don't trade the market, but when you have that kind of backdrop, it certainly gives you confidence to go out and be long stocks, especially growth stocks.
So I want to move on and talk about Facebook a little bit. I know you have a strong opinion on this, and you posted something on Twitter the other day. And one of the annoying things for myself, and I think a lot of futures traders, is the FANG stocks and how much emphasis is put on them in the media. And I've been through this in my career. I've been doing this almost 20 years, trading full time. And there's always a certain sector of stocks that matter for a certain amount of time, and then the indices move on to a new hot stock, and then they seem to go up with whomever wants to lead them. So what is your thought on totally. Facebook and what's going on right now with them? And what does this mean for the FANG stocks? Is there a run over? And does it even matter?
So Google is the single most innovative stock I know. I love it. And I was a big put writer on weakness, and that trade has worked out very well. So Google is its own thing. Amazon is an animal. Don't get in its way. I don't know where exactly it's going, but it just keeps going, so fine. I'm not long Amazon. I am long Google. Facebook, I am currently not long, and I don't like it. I got long back on the fake news scandal because I like the way Zuckerberg handled that particular issue. I do not like the way he is handling the current issue. The doe-eyed appearance on CNN in a T-shirt was pathetic. And the real problem with Facebook is that there's no way to regulate crowdsourced content from 2 billion people. They've got something like 2,000 people at Facebook working on, quote unquote security, whatever that means, and editing posts and all that. But, that means that you would have to have, I don't know, whatever 2 billion divided by 2,000 is. I mean, so I guess every editor has to follow 1 million accounts or something. I mean, that's a farce. Obviously, that's impossible. Not even all the algorithms in the world will say that. And yet, you look at LinkedIn, they've got the little blue check, which is verified. On Twitter. Meanwhile, on LinkedIn, if you lie, you're going to get fired because that's all job related. So there are implicitly ways to kind of govern the system. I don't know exactly what the solution is for Facebook, but I think they need a radical reset. And I'll tell you one thing that would get them there a lot faster than the way they're going about it is to do something like create Facecoin. Think about it. If you created Facecoin to reward people's posts, and I don't know, by the way, what the algorithm would be that would determine that: number of likes, quality of the post, was it a cute picture, was it socially aware, are you verified elsewhere, I don't know, whatever. You put all that stuff in the mix. You'd award people with Facecoin, which they could then use to in exchange for goods and services on Facebook, in the same way that your Chase Visa card allows you to gather points which you can then redeem for hotel stays or whatever. Delta, mileage awards program. Create the same thing on Facebook. And then, by the way, let it be transferable so that you could actually buy and sell Facecoin the way you can buy and sell Ether or Bitcoin. Now, all of a sudden, Facebook goes from being a taker, where they take all our data, all our content, all right, sell it for billions, and all we get is likes, to all of a sudden, we're partners. No longer are we users on Facebook. We are partners with Facebook because we're putting in our hard work and effort to create that content, and we're getting something back. Right now, we don't get anything back. So the problem is with Facebook, it's actually a totally one-sided beast, and that's why I say they need a total redo, a reset, whatever that Hillary Clinton button was that she gave to Putin that didn't work. Reset. Facebook needs a reset. Maybe Facecoin will do it, but it's about trust and about participation. And right now, they're just one-sided. They're selfish. And I am not long. I don't like it. I don't want to be a part of it.
Last topic for today before we get into rapid fire. You have your 3 big themes for 2018. Can you share those with us?
Yeah, you bet. 5G, smart cities, and the holy grail of healthcare. The 5G build-out is going to be absolutely gigundo. 5G uses microwaves. I mean, these things are tiny. The reason that you use microwaves is because when the wavelength is really short, the frequency is really fast, meaning, right? So it can send a lot of data very quickly. The downside is they're very unstable, so you need lots of repeaters. You're going to need equipment literally every quarter mile, and within a city, a lot more than that, because these little waves can barely get through walls. And you say, well, then why would we want them? Because we can get so much more data. Just to put it in simple terms, on the current 4G, LTE, long-term evolution 4G, wow, incredibly fast. Actually, no. It takes sometimes up to 10 minutes to download of full-length feature film. But with 5G, it'll do it in a tenth of a second. Now that's fast. The reason you need 5G is because of the Internet of Things. We're all of a sudden now putting all these signals and all this data, cars communicating with each other, the band around your wrist communicating with your watch, or the shirt you're wearing, checking your heartbeat, on and on. All this new data has to get processed. 4G can't handle it. 5G can. So there are a ton of names. Qualcomm, which has the chips, the intellectual chips, as opposed to Qorvo, which makes the radio frequency chips, all the short distance stuff, to Nokia, the comeback kid that makes the equipment, the repeaters, the antennas outside. I mean, those are 3 5G plays. That's number one. Related, the smart city build out. The single best stock for that is Motorola Mobility. These are not the handset makers. They spun that out back in 2011. But in other words, this is really cool. So Motorola Mobility now has linked up computers and cameras, where they turn an image. You and I see a car going into a garage. The computer sees however many, 50,000 little squares, and it starts to recognize those pixels in certain patterns. And if a car, always goes into the entrance of a garage, fine, it memorizes that, because 300 cars go into the entrance every day, and 300 come out the exit. Well, what if all of a sudden a car comes rushing out the entrance? Whoa, you and I see a car coming out the entrance. The computer just sees pixels moving in a way that they don't usually move, and it sends off an alarm. All right, that's cool stuff. That's what's happening in smart cities. Motorola is all over it. It's security, it's red lights, green lights, it's coordinating lights so that you reduce traffic by putting sensors in the roads. I mean, it's just, there's so much stuff. Motorola Mobility is doing it. I love it. And then finally, because unfortunately you just asked me for my ideas, and as you can see, you give me an inch, I'll take a mile. I'll just keep rambling. But the holy grail of healthcare is figuring out how to use data, people's data, specifically to lower the cost of healthcare and extend life. And the company that's doing it best, believe it or not, is UNH. And I say believe it or not because I've gotten hate mail from people on UNH. They're like, they're charging me $600 a month. I know, it's a lot of money. I pay, as a single guy in New York with a catastrophic policy, I think I pay $432 a month. But the first $6,000 is out of pocket. But what UNH does is they now have 1.3 million doctors, 67,000 pharmacies, 6,500 hospitals, all under one roof. And all the data is shared. They insure about 110 million people, which, think about it, it's like a third of the country. They're like basically a single payer system. They're like the government, in effect. When you have doctors sharing all that data, it's much easier for them to diagnose and to not repeat tests. In other words, I was talking to a patient. I met her at the HIMSS Healthcare IT conference in Las Vegas about 3 weeks ago. She has lupus. She's now become a patient advocate. She has lupus, which is a very complicated disease that typically has lots of other issues related with it, like rheumatoid arthritis. She has 8 different specialists she has to go to. Just coordinating the scheduling between the 8 specialists and getting all the test results shared between the 8 specialists, because they're all on different platforms. She said it's like having a full-time job. Well, her job is to get healthy. Okay, it's not to manage her disease or diseases. UNH puts everybody on one single platform, and now all the data is shared. You can just be a patient. I love that. That's beautiful. That's the future of it. There's a company called Atiri. It's not yet public. When it does go public, when it IPOs, I will be buying it. It was actually given to me by the president of the AMA, the American Medical Association, Richard Madera. He said, because I was asking him, I said, are there any stocks you like? He goes, oh yeah, I love Acuri, but it's not public yet. I said, oh, tell me more. He goes, we backed it at AMA. These are the guys who are using the blockchain protocols to link every medical database in the world. All right. They'll still be encrypted. All the data will still live in those individual databases, but they'll speak with each other. Again, this is the holy grail, sharing data to lower costs and save lives. So there you have it, 5G, smart cities, and holy grail.
The healthcare you talk about is very interesting to me. A lot of that I didn't know. But one question I have about the 5G, the national security issue that's being talked about, how do you think that's going to impact it?
So there's a company, and I never pronounce it right, Huawei, whatever. H is a weird spelling, Huawei. WEI, I'm not spelling it right, but that has been at the forefront. It's a private company in Japan that was in China, originally sort of, I shouldn't say in cahoots, but kind of backed by and created for the Chinese military, which is, I think, what got a lot of people riled up, because Qualcomm, Huawei, however you pronounce it, and a couple of other companies have formed a consortium to try to standardize 5G. Well, actually, standardization is good. That means no matter where in the world you go, your 5G systems are going to work. So you actually want that. But unfortunately, people got a hold of that and said, whoa, Huawei and Qualcomm teaming up. And wait, Broadcom, based in Singapore, wants to buy Qualcomm? That could never happen. And Qualcomm's trying to buy my favorite semiconductor company, NXP, which, by the way, is the company that powers Apple Pay, and they're also the leader in automotive mobility. So you say, whoa, now all of a sudden you could have a Huawei, Broadcom, Qualcomm, NXP tie-up, and suddenly General Motors cars are going to be spied upon by the Chinese. Whoa, whoa, whoa. All this stuff is linked up. So I think the pendulum has kind of swung a little too far, where we're worried about witch hunts. The thing about technology is it knocks down silos, it breaks down walls. I mean, that's the holy grail of healthcare, right? Getting, databases to communicate. So I'm sorry, but there is going to be communication between U.S. companies and Chinese companies and Finnish companies, and on and on and on. You want shared standards. It makes the platform that much more robust. But if you're worried about spying and sharing stuff that shouldn't be shared, yeah, you're right. It probably is going to happen. By the same token, I also recognize that I'm using an iPhone 10 and the camera is always on, so it can identify me, right? Because, it looks at my face to get me to use all my apps. But that also means it's always on. So God only knows who might be spying on me, who knows who's listening to our conversation? I'm talking on an iPhone right now. And, who knows who could be listening in, Anthony? From my point of view, the more the merrier, right? But, it's why I actually don't have an Alexa in my home. That's freaky, because she's always listening. She's always on. This security stuff's a little freaky.
Yeah,
I admit.
It definitely is. Excellent insight today, Adam, but we're not done yet. I have some rapid-fire questions if you're ready for those.
Yeah, fire away.
All right, everyone. Our rapid-fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, visit tradingtechnologies.com. Adam, first question. What trader has influenced your life the most and why?
My boss and mentor. And I would say his name, but he's a very private guy, so out of courtesy, I won't. This guy has taught me more than I can possibly know. I think the best thing he ever taught me was to always figure out who has the other side of the trade. Because, once you put a trade on, you're absolutely certain you're right. But what if you're wrong? So he said, figure out who has the other side. Take him or her, whatever, out for a drink and say, I just learned you have the other side of the trade. I'm long, you're short. Let me tell you why I'm long, then you tell me why you're short. He said, you're going to learn something. You might make a new friend, even win an ally. Either you'll walk away more certain in your view, or one of you will persuade the other to switch. So I just thought that was good advice for life, not just trading, but for life.
What was one of the hardest things that you've had to overcome in trading?
Being wrong. Gosh, I hate stops. You're only rational once, and that's before you put the position on. And so before you put the position on, figure out your target. Well, figure out where you're going to get in, whether it's long or short. Figure out your target and figure out your stop loss and honor those.
How has your trading evolved over the years?
I've become way more flexible, which is probably true in life.
What's the number one resource you spend your time on?
Bloomberg. Nothing else even comes close.
What's your favorite book about trading or the markets?
Honestly, I don't have one. I've never read a book about trading or the markets. It's just been experience.
What's your favorite movie or TV show about trading or the markets?
Okay, this is sort of self-serving because I used to work at Bloomberg TV. I think Bloomberg TV is really geeky. and sometimes unwatchable, but the content's really good.
What's the best piece of advice that you've received about trading or the markets?
Well, I sort of already gave it to you from my boss about figure out who has the other side of the trade. But I'll tell you what, I'm going to give you one of his other nuggets. And that was whenever he would interview someone, he would always ask the same question. How do you make the most amount of money on Wall Street? And from his point of view, the correct answer was find a theme and leverage it. And by the way, if you gave that answer or some variation thereof, you got the job. Otherwise, you didn't. So find a theme and leverage it. I told you 3 themes: 5G, Smart City, and Holy Grail. I've got a few names: Qualcomm, Corvo, Nokia under 5G, Smart City, Motorola Mobility, Holy Grail, UNH, and a Carry when it goes public. Find a theme that's powerful, that has a long runway, and by that I mean 3 to 5, maybe more, 3 to 5 years worth of growth. Figure out the company best levered to that theme, and buy that company, and just run with it.
Now, if you could give a piece of advice to the new people interested in getting involved in trading, what would it be?
Read, listen, read, listen, read, listen, read, listen.
If you weren't involved with the markets, you'd be doing what?
Something creative and artistic. I love to cook. I love to paint. I love to build houses. I built an old barn. It was an old firehouse. I bought it for $1. Solid chestnut barn. It had been a firehouse in Burlington, Connecticut. And dismantled it, moved it, rebuilt it on a real pretty little piece of property over a river, and made a weekend place. I love doing stuff like that. So, painting, cooking, building houses, using my hands, be something along those lines.
Great stuff today, Adam. Where can people find you on Twitter, and give us a website to check out?
Yeah, you bet. Twitter is @AJInsight. And I put a ton of stuff out there. I have a lot of fun doing it. And I try to respond to people when they actually send me notes. And my website is bullseyebrief.com. The 3 ideas most worthy of your time. Every 2 weeks, I offer a 45-day trial, which gives people a good long amount of time to get to know my stuff, to track me, to follow my picks. I've been making people money for the past 2 years. I absolutely love what I do. And I also make myself available. I put my phone number at the bottom of every email I send out. And if someone needs a little extra help or wants a perspective, I say just give me a call, because this is what we do.
Yeah, everyone, I highly recommend you go and follow Adam on Twitter, and definitely check out his website. That's how I found Adam. I started reading some of the posts that he put out there. Great insight on the marketplace. I highly recommend you go there and check it out. Adam, thank you so much for coming on Futures Radio Show today.
Oh my God, thank you. What a pleasure being with you. And yeah, I really enjoyed it. Thanks for letting me talk. I know I kind of ramble, but you let me run, and I really appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.